All right, welcome back, fail-safe investors. Welcome back, fail-safe family. This is another edition to Battle of the Brands. I hope you're enjoying this series. I'm having some fun making them. I'm learning as I go, but that's not why you're here. Let's just jump right into this one, right off the bat. We're looking at Pfizer. Yes, Pfizer. So if you follow my channel and you've seen the last video I did a stock analysis of Johnson & Johnson, and that's the first edition to this edition of Battle of the Brands, and we use the same template we always use, where pretty much I give you the simple metrics of the company, then I give you what the company does, how the company generates revenue, and then I give you the financial statements, then I give you my opinion on the company that we're looking into. So we're not gonna waste our time on this video, so let's get into it. Let's go. Haven't heard about Pfizer. Pfizer is in the pharmaceutical field, or I would say the health sector. So this will be a great competitor to Johnson & Johnson, probably the only competitor to Johnson & Johnson with the size of Johnson & Johnson and all that good stuff. First thing we're going to look at with Pfizer is the metrics. So with the metrics, I usually give you the ticker symbol, the market cap, the share price, the earnings per share, the price to earnings ratio, and if they have a dividend, not all companies pay a dividend, but if they have a dividend, then I'll tell you the dividend yield, and sometimes the payout ratio. Sometimes I forget, you gotta forgive me, I'm human. But then I give you, like, how this company generates revenue, what the brands and products that this company have. Probably sometimes I'll mention the revenue. And like I mentioned before, I'll give you my opinion after I tell you the financial statements, which is the balance sheet, the income statement, and the cash flow statement. Now, starting off with the metrics, Pfizer. Ticker symbol PFE, selling for around like 36, could be like 34, depending on the day, how it feels that day. But we'll say 34 and $36 a share currently in 2020. Has an earnings per share of about $2.52 per share. That's pretty solid numbers with a price to earnings ratio of about 14. So that's right in that sweet spot. That's definitely what you want to look for in a price to earnings ratio. And they have a dividend yield about 4.13%. Now that is great, especially when you consider the payout ratio is about 66%. So 66% of Pfizer's profits is being paid out in the form of dividend, which leaves about 34% to invest into the company. So you definitely want to find a company like that that has a small payout ratio, which means that they have profits left over, which they could just leave or use to grow the company, or just have a surplus. And they have a pretty solid dividend yield. 4 is pretty good. So you have $10,000 worth of stock, you get about $413 per year. That's annual. The dividend yield is annually. So if you break that out across the 4 quarters, you're getting about $100 every quarter, which is every 3 months, which is not bad. So that's the simple metrics. Now, just off the metrics alone, the market cap is about $204 billion. If I haven't mentioned that, I apologize. But yeah, so the market cap being about $204 billion. And the price to earnings about 14 with $2 per share, $2.52 per share. I'd say that's definitely would make me want to look more into this company, because those are pretty good numbers. The price to earnings ratio being at a 20, especially in a time like this where the entire stock market is considered to be overpriced, that's pretty good. Just off that alone, I would probably say that this company is undervalued. But I don't like to jump the gun. We gotta wait and see. But I'd say it's looking attractive. This is something I would definitely want to look into. So Pfizer, right? Pfizer's in the pharmaceutical company, and in a time like these, a pandemic, a lot of companies, or should I say like pharmaceutical companies, are trying to rush to get a vaccine out, because if they get a vaccine out, because if they charge for that vaccine, if they get a vaccine out, they look more profitable when they charge for that vaccine, and they can pretty much charge whatever price they want, especially in times like these where it's a vaccine that is needed on the market. So even if they don't produce a vaccine, if news come out that they have a vaccine and they're trying it out, then those stocks tend to look very well. Now, Pfizer is at the moment working on a pandemic vaccine. I'm not going to say, what disease it is or what virus it is. You should already know at these times. But they are working on a vaccine, and if they do come out with a vaccine, if they are one of those lucky companies, and multiple companies in the pharmaceutical field will produce vaccines. It's not just going to be one company produce a vaccine and the whole entire world is going to go with that one company. A lot of companies are going to produce multiple vaccines. So Pfizer is one of those companies that is competing. But not only that, Pfizer was started in 1849, so they are 171 years old. That is crazy. Not only that, Pfizer has some pretty solid brands outside of, let's say, vaccines and medicines. A couple of Pfizer brands that you might not know would be Advil, Robitussin, and Viagra. Giggity. I mean, I'm just saying, Viagra, it sells. You can even claim Viagra on your insurance as an older male gentleman or whatever. That's what I've been told. But yeah, Pfizer have some very recognizable brands, and those are brands that you can get in the grocery store, stores like that, over-the-counter drugs and all that stuff. But like I mentioned, they also have medicines and vaccines. So yeah, Pfizer is a pretty solid company. Now, one of the risk factors with companies, because before these videos I have mentioned risk factors, because if you read a company's 10K, then most companies will tell you the risk factors is the lawsuits. Like Pfizer has a lot of lawsuits and like a lot of settlements. I mean, and settlements cost money, and these aren't like some $100,000s or $1 million or a couple million. Like these are hundreds of millions of dollars in lawsuits. They have a lot of cases. I don't want to go into detail, but yeah, that's not good. I'm just going to be honest. That's not good. Now, if you are thinking about purchasing Pfizer, if you're looking for a stock that could be that post-pandemic stock, Pfizer should definitely be on your list. I mean, like I mentioned, they are looking for a vaccine. So this might be one of those stocks, but everything is a gamble right now. Like I wouldn't bet the whole house on Pfizer being the stock that comes up with a vaccine or the vaccine and the stock just shoots through the roof. Now there is growth potential with Pfizer, but I would have to go into the financial statements and then kind of like break it down and tell you. But as far as growth potential, just based off the regular metrics, meaning the market cap, the share price, and all that stuff. The share price is attractive at $36 a share, but the market cap is a $200 billion market cap, which means it's not gonna grow that much, even if it does end up growing. So I don't see this stock doubling or tripling. Now, I'm not saying that it's not for sale. Now, some companies do 400 billion, 600 billion, Apple hit $1 trillion. So it is possible, but I don't see that happening like soon. Maybe over the course of, like, if this is a long-term play for you and you want to buy this stock and hold it for like 5 or 10 years, yes. But if you're buying it just as a pandemic stock, maybe not. You're not going to see like double, triple, but that's just my opinion. Now, what we're gonna do is we're gonna go look at the financial statements, and I'm gonna like get your opinion on the stock, and I'm gonna give you my opinion on the stock, if it's overvalued, fairly valued, or undervalued. Like I mentioned, in my opinion, just looking at the metrics alone, it looks undervalued, even though I mentioned that it's a pretty large market cap and you probably won't double, triple your money over the next year or so, but there is still some possibility that you can double or triple your money. Like, I mean, what do I know? I'm just being honest. When we look at Pfizer's balance sheet, they have about 32 billion in current assets, meaning that is money that they can liquidate like tomorrow, pretty much. $32 billion, and from that $32 billion, $9.8 billion of that is in cash, which is great, right? But when you look at their current liabilities, they have $37 billion in current liabilities. Now, that is due within the next 12 months, current liabilities. That's debt that needs to be paid within this year, this operating fiscal year. So, yes, that is bad, right? But we've looked at other companies that had more current liabilities than current assets. So we always have to look at the total assets and put that up against the total liabilities, correct? So when we look at Pfizer's total liabilities, we have $104 billion. Now, when we look at Pfizer's total assets, it's $167 billion. So that is great. That's more total assets than total liabilities, right? But remember in the last video that I did with Johnson & Johnson, and I said, excuse me, remember the last video that I did with Johnson & Johnson, and I said Johnson & Johnson in the last 5 years has written up their intangible assets from about 40-something billion dollars all the way up to $88 billion in 2019. If we look at Pfizer's balance sheet, they pretty much did the same thing. Like if you just look at the total assets number for the last 5 years, it looks like the assets were going up. Right? It looks like they were, adding to the assets, becoming more profitable, I guess you could say. They have more assets. But when you look at the intangible assets, they were also going up big time. So they have $94 billion in intangible assets in 2019, but this balance sheet looks a little bit more honest. So in 2015, they had about $88 billion in intangible assets. Then they went from that to $104 billion in intangible assets in 2016, and then it was the same thing in 2017. But then something else happened. In 2018, they went back down to $88 billion in intangible assets, and then back up to $94 billion in 2019. Now, in intangible assets, like I mentioned before, this is an asset that you can't touch, you can't fathom. I don't even know how they appraise those assets, but intangible assets can be written off over time. That's how it's actually supposed to go. If you have an intangible asset, you pretty much, it depreciates with time. It's kind of like a patent almost. Like it matures, so with it maturing, it depreciates. So they're actually doing it the right way. Now with Johnson & Johnson, and I'm not knocking Johnson & Johnson, their intangible assets kept going up. It was like they kept adding more to their intangible assets. Now I have a question for you fail-safe investors. How do you turn intangible assets into cash? The question of the day. I want to know. Someone look it up for me. Leave it in the comment section down below. How do you turn intangible assets into cash? $1 million question, or $1 billion question, I should say in this case. You know what we got to do? We got to look at the income statement, then the cash flow statement, because just the balance sheet alone doesn't tell you enough about the company. Remember that. 2019, Pfizer made about $50 billion in revenue and $16 billion in net revenues. Pfizer made more money than Johnson & Johnson, so remember that when I do the Battle of the Brands episode, the finale for this one. Now, like I said, we always take the net income from the income statement, and then we subtract the capital expenditures from the cash flow statement, and then look at what the free cash flow is. Free cash flow, that's really what it's always about. So when you take the $16.2 billion from the net income and subtract the $2.1 billion from the capital expenditures, you are left with $14.1 billion in free cash flow. That is really great. That is, I'm not gonna lie, that's pretty good numbers. So looking at all of that, my opinion about this company would be, I'd say this definitely is slightly undervalued. So close to the price that it should be selling at, slightly undervalued. Now, if they bring that earnings per share up to about $3, maybe $4, then I'll jump on a stock like this. Now, even at a price now like $252 a share, the earnings per share, and a 4% dividend yield, it's pretty attractive, I'm not gonna lie. So even if you're not looking for like a post-pandemic stock, I'll say Pfizer's a pretty solid stock, just to have. Like, it's a nice stock to add to the portfolio. Like, just gonna say, this would really bone up your stock. I have to. So yeah, I want to know what you guys think about this video though. So yeah, leave some comments down below. Hit the like button, hit the subscribe button if you haven't subscribed to my channel. More videos to come. In a couple days, you're gonna see the season finale of this episode, probably the season finale of Battle of the Brands, and I'm gonna move on to season 2. I gotta figure some things out. But it's been fun, and to the next one, you already know what I gotta say. Let's do it.